So as mentioned, my name is Stephen Gugu, one of the founders of AAA, and we're really happy to have Fiona, who joined us as the CEO of AAA. She's been doing some really good job, a really good job in terms of flying the AAA flag. I'm sure you've seen a lot of stuff that we're doing. And this idea of having AAA as the Angel Connect as physical events was actually from Fiona. And so we're very happy. And the whole idea is this. When we started out in 2020, AAA was supposed to be physical. It was supposed to be all about networking. It was about making sure that angels are able to interact across the continent. And then you all know what happened in 2020. There was COVID. And so we shifted gears and became virtual. And then when we started out as virtual, making the progress to move back into physical has been a bit tough. But we've decided that, it's really awesome when people are able to see each other, they're able to interact and have conversations. So today's session, which is the Angel Connect, which is supposed to be a knowledge session, is happening on a Sunday afternoon, right? Which is a tough time to have an event. Everybody came here for the food and for the networking, I'm sure. But you still have to make sure that you pay for your lunch by listening to something and at least starting the conversation. So I'm gonna start from Umulinga, and I just want you to introduce yourself and maybe mention what are you looking forward to for this week. Yeah, I'm sure you didn't only come for the AAA Angel Connect. There's a lot of stuff happening in Nairobi this week. What are you looking forward to for this week?
Thank you for the question, Stephen. And good afternoon, everyone. It's a pleasure to be here in a room full of people who believe in African entrepreneurs. My name is Umulinga Karangwa. I was born and raised in Belgium, but my parents are from Rwanda. And I've been living in the continent now for 20 years. I work in investments for all that time, for more than 2 decades. And my day job is not to invest in startups, but with my savings, I do invest in startups. And the reason I do it is not because it made me a lot of money. It doesn't yet, but it's because it doesn't. But it really creates more opportunities for African youth, and it's really important. I really want young Africans to be inspired to stay on the continent and work on the continent. And I find that angel investing is one of the ways to inspire them to do that. So you introduced me as one of the founding members of NIBAN, but I'm not a member of NIBAN anymore. I invest with other networks now. I did contribute to founding it a long time ago because it was really needed to get more angels active in Kenya. But today I don't invest with them anymore. What I look forward to this week, so I came here for work because AFCA is an important event for us. But I look forward to reuniting with many of you who invest in startups and share stories, deals, tips, leads, etc. So please come and share ideas and deals and etc. I'm looking forward to that. I'm part of cohort 2, which happened indeed during COVID times. And I had started investing before, so I'm really excited to talk about syndicates today because I started investing as an angel through a syndicate. At the time, that was a long time ago, 7 years ago, Future Africa was accepting people on a deal-by-deal basis. Today they've upgraded themselves to a fund. But I would never have dared doing this without a syndicate first. And then I would never have dared thinking I was able to do it, lead a syndicate, if it wasn't for AAA. AAA was great in terms of teaching us the skills, but empowering us, and the platform is amazing for networking. If you are still hesitating to join the next cohorts, please sign up tonight because you should not hesitate.
So let's move to the second person on the panel, Nous. Bonjour.
Bonjour.
I was telling her that I'm learning French. I'm on day 44 of my streak on Duolingo. So hopefully I keep it going. Then she tried to threaten me with some French words, so I told her, sorry. Day 44 doesn't cover that, unfortunately. But Nous has been upgraded to become a panelist today because we're very fortunate she's in Nairobi today. And so she can share with us some views in terms of what's happening in West Africa, in Cote d'Ivoire. So you can introduce yourself and maybe introduce the Angel Network that you helped to found and so forth.
Good morning, everyone. I'm very glad to be here today. It's actually my first time in Nairobi. And yeah, I just came this morning. You can tell that Nairobi is the place to be because after a few hours, I met two of my very good friends and co-investors at Sivan and my coach at AAA. So we'll come to this, but that was the opportunity to sit on this panel. So thank you for accepting me. I will share our experience at Sivan. So I wear two hats. My day-to-day hat is as an investor, investment director with Investisseurs et Partenaires, IMP. IMP is a group of impact investors. We do direct investing in equity across Africa, and we also sponsor and launch small SME funds across Africa, and that's particularly what I do. And the other hat is, of course, as an angel investor. I was one of the founding members of CIBAN, Côte d'Ivoire Business Angel Network. So I am based in Abidjan. I am Ivorian. I'm part of this ecosystem. You know, I've been for the past 10 years as an equity investor, of course. So when my friends told me that they were thinking of launching an angel group in 2022, I found that it was an excellent idea, and I, of course, wanted to join. So I'm part of the leadership team. Siban is now 4 years old. We've done a few deals. We've participated in the, I think it's 6 cohorts, if I'm not mistaken. A lot of us did. It was a great opportunity. Even me as an investor, I learned a lot of things on angel investing as well. They're very complementary. And we had the opportunity to have a coach through AAA who was Lulinda, and who've been following our journey even after her assignment was done. So I'm also very grateful for that. Yes, exactly. I was asking myself if we've done fundraising, and I'm still looking at her like that because the fundraising is not done, but we're getting there. So yes, very happy to be here, and for me, what I'm the most looking forward to is, of course, AFCA. AFCA brings me here, but again, it's my first time in Nairobi. I know that it's a very vibrant ecosystem. I've heard about it a lot from my side of Africa, but it's different to be sitting here and talk to different people, angels, entrepreneurs. So yeah, that's one of the things I'm most looking forward to. Yeah.
Thank you, and welcome. Indeed, welcome to Nairobi. I'm glad that you made it today when we had the panel. So really glad to have you here. The next person on the panel is the only person on the panel who's not a AAA alumni. I think we're going to give honorary alumni membership to Adingira because he's been one of the key supporters of the work that you do at AAA. So Adingira, I'll allow you to introduce yourself and the work you do at Bowman's, and then we'll jump on.
Hi everyone. So as you've heard, my name is Wadingira, but if you can't pronounce that, you can call me G. People do call me that. Having had the two of you introduce themselves, I'm actually wondering what I'm doing up here because what I was looking forward to this week, and it was going to be my genuine answer, was sleep, because I don't leave my bed on a Sunday afternoon, so I needed to make up for this being here. But Steve is when Steve calls, I answer, so I'm very happy to be here with you guys today. I work with a law firm called Bowman's. We're a Pan-African law firm. What we do, I won't bore you with those details, but my personal passion and personal interest in why I'm here and why I keep participating in African Angel Academy is I strongly believe in that we as Africans should be in a position to fund ourselves and fund the next enterprises and the next businesses that lead to employment and everything else good that comes out of that. I am particularly a champion of African capital solving African problems, and I am constantly singing all the time and asking the very controversial question, can you really be an African business if all your capital sits outside the continent? And I'm happy to also come today and be controversial on that topic, but it's a great honor to be here and happy to lend my now, actually, after you two, I guess my experience will be theoretical. So really listen to them. I'm just here for the vibes. It's a pleasure to be here.
Really appreciate that we got you out of bed. At least you have a reason to go back to bed after this. You've worked for, yeah, sleep. But on a serious note, if you want to do deals in the continent, please make sure you speak to him, especially in the VC space, in the angel space, and so forth. I think Bowman's is one of the leading law firms that are doing some really cool stuff and really thinking about how to move the conversation forward. So thank you. Now, before we start with our questions, I saw that Maxime is here, and I want to just bring him in just for a second, right? Why this conversation is important. Earlier this year, Maxime did a really nice piece. If you don't know Maxime, if you know the Africa, not Africa, Africa the Big Deal, yes, and also Catalyst Fund. If you know those two, then Africa the Big Deal. If you want to get data around early stage investing in the continent, please make sure you follow their weekly newsletter. They also have quarterly roundups in terms of all the data around early stage investing, VC, and so forth. So please make sure you follow what they're doing. But the article he did was just doing a spotlight in terms of how the state of early stage investing is looking. And there's some interesting statistics in terms of just the proportion pre-seed deals are occupying in the continent compared to, so is this pre-seed or pre-seed deals compared to other jurisdictions and what that might mean. So I really wanted to speak about that point before we get started, and then we'll kick off with our panel. So Maxime, welcome.
So more planning to do the sleep thing, but cool. No, I'm happy to share. I don't want to steal the show. Happy to share a few stats on this particular piece. We actually did an update of it a couple of days ago, and one of the interesting statistics is that the percentage of deals, startups deals in Africa right now, that is below, let's say $300,000, right? In 2021, it used to be about 40%. So basically, you take all the deals in 2021 in our database, and we only take deals that are above 100K. 40% were basically between $100,000 and $300,000. So you had a very healthy amount of early stage investments going through. Looking exactly at the same kind of data, nowadays we're at 20%. Which is a problem because it's supposed to be a pyramid, right? Supposed to have a lot of small deals at the bottom and then a small number of large deals at the top. And both are needed. We need companies to graduate, but the problem is that right now most of the deals we're seeing are later stage. In both dollar terms, that's expected, but also in number of deals, and that's a bit surprising. And so that's definitely a concern because maybe we will not see it now as a problem, but in 3, 4, 5 years down the line, we'll be like, where are the Series A company? And so that's something to pay attention to. It's driven, unfortunately, a little bit by the fact that early stage investors right now are a little bit more later stage, and you have also, because this ecosystem is still small, when you have a couple of very active early stage VCs that stop doing deals because they're fundraising, because they move to a different, let's say, later stage and so on, then all of a sudden you have a bit of a vacuum. And it's a little bit what's happening right now. We have several very active investors like Launch Africa, like Lofty Inc., that now are looking at a bit later stage. We have investors like Techstars that is no longer doing any more deals in Africa. We have Y Combinator that stopped doing deals in Africa, or very, very little, and so on and so forth. So you accumulate that, and suddenly you have 5, 6 investors that would do together 200 deals a year that are no longer there. So these checks are no longer being written. And so at Catalyst Fund, we're a VC fund playing in that space. I mean, we always invest pre-seed stage in climate tech companies, and so we're seeing it with our portfolio companies. Pre-seed are taking so much longer to close now. It used to be 16, 18 months. Now it's at least twice as much, and so that is definitely an issue we're seeing right now. So yeah, hope that answers your questions.
So now to our conversation, which is about syndication. I want to start with you, Adingira, and I want to just first of all define terms. What's the difference between, I guess, a syndicate? What's a syndicate, first of all, before we move to the difference between the syndicate and the angel network? Because I don't want to imagine that everybody understands, why you need a syndicate and why you need an angel network. And you can just start maybe with the first one. What's a syndicate?
So I'm going to try and use as much as I can more, how do you say, common speak terms so that we are all on the same page. And for me, the easiest way I can describe a syndicate is imagine a train and the cars of a train. So cars is, what do we call cars in Kiswahili? But you know, the parts of the train, the ones that come after the engine, you know those ones. So a train itself on the engine is able to move from point A to point B, Mombasa to Nairobi. At the car, you're able to load additional goods or people if it's a passenger car, right? So if it's a 30 car vehicle, that means in each car you can add as many different components as you need. So to me, a syndication is how these 30 people who would have gone to invest in, we'll use Steve as an example. So Steve Limited, individually, instead get onto this one train that is now, we will call it Syndicate A. And the 30 people are the 30 different cars who come with the cash, actually cash in this case, let's stick to cash to keep things simple. And that's how we invest into Steve Limited. So as opposed to, for example, I think you asked Angel Network, which is more informal, and you guys will correct me if I speak out of turn, but it's more about, there's no legal structure or legal association that comes out of the network as compared to a syndicate. A syndicate requires that we have, actually, incidentally, a vehicle. So vehicle in this case being the train, or vehicle in this case being the entity. We'll talk about that entity that you set up in order to pool your investments and then invest them in Steve Limited. I hope that's clear enough. Yeah.
Yeah? Okay. For more context, let's go to Umulinga, right? Just around the same question, why not just take the whole angel network and invest into deals as a whole angel network? Why have to create syndicates within the angel network?
Thank you for the question. So the reason why syndicates work better is that it is quite difficult as an angel group to always agree on every deal. So the only two angel groups that are angel friends that I know, one of them has to agree on every deal, so everybody has to agree to go ahead. And the other one is there's an investment committee who is going to recommend investments. But then they need to still gather sufficient support from the group for people to accept that you join. And because angel investing is quite difficult, quite emotional, and extremely risky, it is quite difficult to get such a level of consensus on an angel deal. It's not like buying a bond, and most of the bonds are going to be companies that are, there's a lot of information on them, they have track record, so you can decide on a lot of information. When you're doing an angel deal, the startup is just starting, there's a lot of risk, etc. And I've not seen human beings being capable of agreeing to that level that everybody can say yes to the deal. That's why syndicates work much better, and most angel groups that write a lot of checks operate as syndicates. So as a syndicate, you're going to go to the deal day and see 4 or 5 startups pitch. The ones you like, you look a bit more in it, and there's a group that creates itself, and they are going to together dig more and DD. And then whoever is satisfied with the DD result will invest. And no one is forced to invest, and that works much better.
Okay, thanks for that, right? And I hope that's crystal clear that we are the angel group. The guys who are interested in our startup, the 4 of us, are our syndicate for these. And there's going to be another syndicate, and another syndicate, and another syndicate that invests. So let me come to you, Nous. So what's been your experience in Cote d'Ivoire? You've said you've done a couple of deals as an angel group. One, how easy or hard has it been putting together the syndicates or doing the deals? Maybe you can just walk us through, and maybe just paint a context. Because at times when we speak about angel investing, we know a lot about what's happening in Kenya, Nigeria, South Africa, maybe Egypt, but maybe not as much. Maybe you can start by painting a picture of just what's happening in Cote d'Ivoire before you move to what's been your experience, creating the group and starting your own initial syndicates.
Yeah, as I said, the group was started in 2022. Prior to that, there had been other groups or other attempts to set up angel groups, but none of them had really made any deal. One of them was a group that was created around a business school, and the other one was a local initiative. But precisely because they didn't manage to get a large group or agree on a deal, or struggle as well with the pipeline, it was quite difficult to go through the deal. I think what helped with CBAN was that the founders, some of the founders were already in the ecosystem. The key members were also the founders of an impact hub, including Astu here. So they did have this, this understanding of the ecosystem, a bit of a pipeline, and a strong motivation to move forward. So the first deal came quite early. I think less than a year after the group was created, with a very strong entrepreneur that was well known from the members of the group. So I think that was the first thing, like understanding, knowledge, and trust in the entrepreneur. The other thing is CBAN decided to start with quite small tickets. I think the entry ticket was 2,000, 3,000 euros, so it's quite small, but we believe that in our ecosystem, which is not as vibrant, where people don't know that much around startups, and we didn't want to stay just within people knowing about finance and all. We have a lot of people coming from big companies, corporates, some entrepreneurs, but not everybody is knowledgeable about the ecosystem. So to be able to pull them, you needed to be flexible on a ticket as a starter. So we did that first deal. Then we, as a syndicate, so maybe out of a group of like 20, I think the first syndicate was with 8 angels. And then we asked ourselves the question: should we start a fund as well? Should we structure the syndicate so that it's easier for the angels to come together on a deal by deal basis, but with a vehicle. But then we were quite limited because in West Africa in general, there's no legal entity or format that is adapted to investment fund in general. So a lot of us struggle with that. Even with these established funds, we have to establish our funds in Mauritius or look for other platforms, like maybe in Rwanda. So we looked at all of this because domiciliating locally was not that easy. We pursued this reflection. We have not reached the end yet, but I would say that's one of the difficult things. We kept doing deals. But the size was small enough that each of the angels could come on the cap table. But we know that we won't be able to do that forever. And as the group grows, as the tickets grow, we will need a structure that's a bit more formalized, right? But then we need to play with the difficulties of structuring something locally or go offshore, but with the costs that are associated with that, so it's kind of a conundrum for now. So we're trying to be flexible and go, by deal, yeah.
Well, thanks, and thanks for walking us through sort of like that step-by-step kind of approach of how you approach the first deal, and congratulations for doing the deal. However small, however big, it doesn't matter. I always say if you're gonna start angel investing, your first deal is probably the most important deal, because it's almost like, finally, I've done that. Now we can get into investing, right? But of course, don't just invest for the sake of investing. There's nothing as bad as the feeling you get for losing your money, right? They tell you theoretically, yeah, as an angel, you might lose your money, etc. Then when you actually lose it, you're like, wow, that feeling is different from knowing it. So don't have the FOMO for just let's get the deal done, but it does help once you sort of like done the first deal and you're moving forward. So I think let's move to a bit of legal. A syndicate group has come together, they're making an investment, right? Now there's always a challenge of, you have people in this syndicate, probably they don't know each other as well. They need to stay together as one syndicate for the next, 5 years till they exit, or whatever the period it's gonna take and so forth. What are some things that someone should be thinking about when they're structuring their syndicate from a legal perspective, just to make sure that even when things are really bad, the investment remains secure, remains safe, and so forth?
Okay. I think the very, very first thing that anybody should do is segregate your investment or your syndicate into one corporate vehicle. So she's talked about the struggle. So depending on the jurisdiction, it might be easy. So like if in Kenya, we have many options. You can do a company, you can do a limited liability partnership, you can do a limited partnership. If you're wild enough that you want to do esoteric structuring, you can come, we can do trusts and all sorts of other things. If your syndicate is a bit bigger, you have a lot more money. As she mentioned, you can go offshore. So there's Mauritius, and Rwanda is now trying to position itself as a potential jurisdiction. In Mauritius and if your startup is in Delaware, I think it's not BVI. I'll tell you which other jurisdiction when it comes back to mind. They have this concept of one company, but inside that company you can have mini companies, so you don't have to set up separate entities. So in Mauritius they're called VCC, variable cell companies or variable capital companies. In this other jurisdiction, I'll tell you, it's one of those islands. They're called protected cell companies. So that's something else that can be explored. But that's, as you know, as you get offshore and as you get bigger, the expenses then can justify you having a separate vehicle. So if we come back down to break it to the basics, for those of us who are in jurisdictions where it's easy to set up a vehicle, think about your company being set up or a limited liability partnership. Then the second and the most important thing is for you guys to document and write down between yourselves as this particular syndicate, what are the rules that govern how you invest? So are you having one person as the lead and the rest of you are following? So lead means that, for example, if you use you as an example, she will undertake all the work of the diligence. She'll be the one on the calls with the founder and the startups, right? If there are meetings, if there are decisions to be made, if the investors are being called around the circle, she will go and she'll represent us. So is she our lead and the rest of us are following on that investment? If the point is that we're small enough, we're 4, 5, 6 people, we don't need a lead. So how do we make decisions between the 6 of us? Is it consensus? Is it unanimous? Is it majority speaks? If it's majority, how do we determine what that majority is? So is it simple majority? Is it greater than a simple majority of the people sitting around that table? If we have her as a lead and she's doing all of the work, so let's say our syndicate is bigger, it's 15 people, so she's our lead. She's going to tell you guys, I can't do this work for free, so I also want to be paid. So now we introduce the concepts like carry. Carry basically means we give her a portion of our profits because she's done all of the heavy lifting of getting this deal together and shepherding it all the way to the end. So do we have an agreement of this extra compensation that she's supposed to get? And if the answer is no, do we all understand that it's no, and is she okay with that? And if the answer is yes, how did you determine what is that percentage? And how do we ensure that everybody pays their fair amount of that return when it comes? So then the third thing that comes is, so we talked about governance as the second point. So the third thing that comes is when the returns come in, when the money has been paid out. This startup, we've had a successful exit. How does that money get distributed? Seems like a small point, seems easy that it's pro rata your contribution, but we had costs. So her costs is the first thing. If we had to take on other things, administration costs, because we decided to set up a company for this, and there's a company secretary who charges us an annual fee for that, and one of us had been paying that annual fee out of pocket, or we'd all contributed, but not everybody contributed their share of the costs. How do we first handle all those costs before we then distribute the funds? So I'd say first have a structure as your first point, and then secondly, document everything about your arrangement as a second legal point.
Wow, thanks. And I like that you've given that level of detail. Of course, if you have any questions, you can talk to Wadingira after this. Most of these documents are also available. You can go through ChatGPT G and then finally end up with him subsequently to get some of these documents. And very important, if you go to the AAA website, www.africaangelacademy.com, we have some legal guides for different countries in terms of if you want to set up in different countries. I think by now we have 8, if I'm not wrong. So we have Kenya, Uganda, Tanzania, Zambia, Nigeria, South Africa, and Ghana, if I'm not wrong. So you can download those. They'll give you very good context in terms of just what to expect when you're in those markets. Okay, thank you for that. Let me move to you, Umulinga. And let's maybe just getting a bit more practical. You've done a number of angel deals, right? And syndicates, of course, have been presented as part of the big solution to getting more deals done. Because, you know, as an individual, you have your 50K. You don't want to invest all that in one company. You want to invest in maybe 5, 10 companies, whatever it is. What are some things that you've seen? Have you seen any challenges with syndicates in terms of getting deals done? Have there been situations where, you know, the theory, yes, is that, you know, ideally they should solve the issues, but you'll be like, I wish I just went in directly just by myself?
Going alone is never a better option because of the fact that you can't diversify enough. And it's really important to diversify and to understand that you will lose a lot of money because most startups fail, like in every market. And in Africa, it's not any different because there's also a lot of difficulties that you don't see in other markets. So I've never seen a situation where I was led to think that it's better to go alone. But there are many problems because a syndicate is not any better than an angel syndicate won't be any better than if you are like a real estate owner. Often it's going to be through an association of owners, and those are full of problems in every country because human beings are very constant at fighting with each other. So there'll be a lot of disagreement, and if you add money to that, there'll be a lot of stress. And then if you add uncertainty and changes, it just compounds the whole amount of potential for friction, because startups will often pivot. Founders often change their minds. They can be difficult to deal with, and then the syndicate is going to suffer from it. So I think that there'll be many issues. The costs that Wathingira mentioned, we never agree on how to share them, even though many of us have a lot of good intentions. We sometimes think it's unfair to give carry, or we think it's unfair to share costs evenly. It should be divided by the number of angels, because if I'm investing more, I should be incentivized, etc. So there's a lot of issues, but it's always better to go as a group. And I think you'll be a better angel if you're prepared for those issues that you see in every human group, like in every family, in every office. You have office politics. Everything with humans is the same. So if you really care about having an impact on entrepreneurs, you just be ready for that, because no group will be perfect, and there'll be issues. If you, I love the AAA website in terms of the resources you have on many different countries. So they have documents for OADA, which is the region where NUS is investing. They have documents specific to local deals in Kenya or South Africa or Nigeria. And this will help you a lot as an angel to find information on how things should ideally be done. And then, of course, someone in your group will have other ideas, so you'll have to compromise. It's better than not doing deals. So, yeah, I think it's never better to go alone, especially because the most important part of angel investing is not writing the check. It is adding value to the startups. So a lot of the work will be after you invest, helping the entrepreneur, from mentoring to helping them close deals, to helping them in the next rounds. You have to spend a lot of time when the cap table is changing, working with the entrepreneurs. So the more you are on the syndicate and the more skills there are around the table, the better it is. So these people that you find stingy, that you don't like to invest with, might be really good at negotiating in the next rounds, or they might have very specific skills like legal or HR that you don't have, that you benefit from. So there are many reasons why, even though it's difficult, syndicates are much better than going alone.
Thanks. You know, if you want to go fast, go alone. If you want to go far, go together, right? I have seen situations where, you know, as a syndicate, it just takes forever to make decisions and deals get off the table, right? Because, I don't know, you're waiting, you're creating the syndicate, it's an LLP in this case, because that's the instrument you're using. But just getting the KYC for everybody just takes forever. And by the time you're ready, the deal has gone. That happened to our angel network. But I like what you say, that it's just like any other group whenever you're doing things with other people, there's complexities that come, but those complexities are hedged to a certain extent by the value that you get by being part of this group. And I really like the point you mentioned that there's some people that you look at, you'll be like, this guy will never add any value to this syndicate. They're just putting in $1,000. And then you'll get stuck in this space, and this person will make the one phone call, and you'll be like, wow, okay. I didn't know that you had some networks that you could use, so I really like that point. So I want to open it up to questions from you guys. We're going to finish straight at 4. It's 20 minutes, and if the rain doesn't kick us out before that, but we have 20 minutes. So I'm going to ask them one question, and then I'll pick any questions from you. So here it's eve of AFCA, which is the largest gathering for venture capital and private equity in the continent. And there's what Maxime mentioned earlier in terms of just how the state of early stage investing, not only angel investing, early stage investing is looking. So if you are to be asked at this point, for you, what do you see as, I mean, we've had, what do you see as the problem? What's the challenge that's, caused a bit of, I don't know, I feel like the gusto, the energy that used to be there back in 2020, 2021, 2022 is not there as much. So for you, what do you see as what's been the problem, and what do you see as what do we need to do to just get the energy back? And maybe it's not necessarily getting the energy back, it's just how do we just ensure that we go over this phase and do the work that needs to be done in the continent, because if we don't do it, nobody's going to do it. Right?
Definitely, early stage investing is we're still lacking in many of our regions, and I think particularly where I stand, I think the past few years we've seen the strongest rise, maybe before it stopped, was through the grants. With the donors, so it went up until we had the big fall with USAID, and it really took a hit. So we understand that it's even more important to mobilize different pools of capital, not to be only waiting on that, but mobilizing a private capital, hence the angels. I think in our region particularly, we need to strengthen the ecosystem. We struggle a lot with pipeline. For other regions, it might be capital or other things. For us, I think we do need to see more structures that help the brilliant entrepreneurs to get from point A to B. And we know that as angels, we're here to take risks. But if the entrepreneurs are not really structured, or the levels of structuring that you might see as a standard in other regions, that we're not reaching that, it's even more complicated to bring in new investors, because the risk will be even higher. So there are different ways to see this for us, and that's also something I do on my day-to-day job. We're trying to strengthen that ecosystem, bring in more capacity to entrepreneurship support organizations, so that we have the right pipeline, and once we have that and we communicate well enough, then angel groups like ourselves can bring in more members, and the two will come together. And of course, on top of that, we need to take advantage of forums like AFCA or others to bring in more money to support the whole of the ecosystem.
Thank you. Focus on getting better quality pipeline by strengthening the ESOs, right? And I think that debate has been going on. One of the questions that I was asked one of these days is, if the person running the ESO has never run a business, how can they churn out really good startups? I'm going to leave that just there. I won't say anything. Wadingira, what do you think is the What do you think they've said? Okay, Mulinga, go ahead.
Thank you for the question. So I think the solution is really in this room. The startup ecosystem has been hit by a double whammy of much less support for the sector, because we were far too donor dependent. AAA is an amazing success. The return on investment for the donors is really, really big. but it was really donor funded. AAA exists because European DFIs gave the money, and NU starting her network, and NIBAN started because of this European money, donor money. And this money is now drying out, and we feel it very much in the ecosystem because Rwanda, where my parents come from, the angels were very much either trained by AAA or by some other similar outfit that would help them, because otherwise they would not know about all of this. But the solution is in this room, because we should not lament that donor money is gone. We should just replace it. And I don't invest in startups to make money because it doesn't really work for making money. I do it because I really want an Africa where kids don't just dream of leaving it. And of course, for that, they need to have economic opportunities. Otherwise, it's very normal that they want to leave. And you should not underestimate the difference you can make by writing a check of $1,000. And if all the, let's say, affluent Kenyan investors would do it, it would make a huge difference to the startup ecosystem. And the only reasons why economies like the US or the UK are doing so well is because entrepreneurs are supported. So the part, like in this room, the solution is there if people want to take part in supporting entrepreneurs, not to make money because it's going to be a bit of a gamble, but because it really creates more, like a more attractive country for young people, where they can find jobs, where they can start a business and get support. So it's really important that people realize that, because even if the donor money comes back, it should not be what we need for what helps our startup ecosystem. So what we've seen 5-6 years ago was very much donor funded, donor led, not us Africans supporting our local entrepreneurs. And this needs to change. The solution is really us writing checks and taking some risks and helping entrepreneurs.
Interesting, thank you. And idea about just making sure that we're writing checks, right? I was in a conversation last week with Imperial College students who are here on a trip around doing business in Africa. And I was hosting Oreo Kolo, that many of you may know. And the one challenge here, which was such an interesting one, she said that the African elite has to be more ambitious, right? In terms of how they are playing in the continent, right? And she was saying that if all people are going to do is open clubs, buy land and so forth, then we cannot transform the continent, right? If you look at other jurisdictions, the elite has time to do those things, but they also just invest in talent, invest in some of the stuff we're talking about here today, right? So even the people in this room, we have to be more ambitious, not just buying bonds and money market instruments and waiting for the next IPO, right? We need to invest in the continent, in some of these startups that are doing some cool stuff. So Adingira, over to you.
He was very right. But also just speaking around some of the points. So, and I'll give this using a story. For the longest time, I have been arguing with, so in my day job, I know I don't look very serious, but I actually am very serious in the office. But in my day job, I do represent now like INP when they invest in people. And one of the arguments I make constantly is, if you guys don't want to exit via African stock exchanges, because you argue that there's lack of liquidity, and the one that's given the most is Nairobi Securities Exchange. And I made the point and I said, that if you believe the exchange is not liquid and you don't list, it will continue to be illiquid because people are not bringing listing. It continues to be a nasty feedback cycle. We've seen this year only just 2 IPOs, the KPC IPO. Okay, let's not talk about that one. And then I did this one. This is the ALP REIT, which closed in January. Both oversubscribed. Then last year, 2 debt offerings, Safaricom and ABL. Granted, those are massive companies, so with huge brand presence, that's a different story altogether. But what's so interesting is that in that span, Nairobi Securities Exchange has all of a sudden become the thing that people are talking about. So this week, I've just had 2 conversations with 2 of my private equity clients who are looking to exit via listing. My point made itself clear. As long as you think that there is a liquidity problem and you don't bring your company, you reinforce the impression of there being a liquidity problem. So bringing it down to your point, and this is why I piggyback on everything that they've said. African capital is what's going to solve problems for us. For the longest time, I think that early stage investing followed the trends that were set by European and American capital that came here to invest in African startups. That capital chased tech companies. So all of the early stage investing that was being done was for tech startups. And I'm not saying that tech startups don't have a place to play in our ecosystem. They do. We have some of the best tech companies in the world, hands down, on this continent because they solve problems where there is no infrastructure. But if we're all just chasing tech, we then overlook other industries in other areas where there is actual real potential for real growth and real impact on the ground. The valuations will not give you the crazy valuations we're seeing AI companies getting now. I hear that some people are about to IPO on $1 trillion shilling valuation. My mind cannot compute what $1 trillion shillings, look at me, $1 trillion, I can't compute that. But if we all are chasing that, we miss the more obvious companies and opportunities that are here around us. So I want to say, as they've said, the solution is here. We mobilize our capital in our currency, which we understand, right? Because we understand Kenya shilling, franc, whatever that other currency is going to be. We understand our local dynamics. What does it take to start a business in a regulated industry in Kenya, in Rwanda, in Cote d'Ivoire? We understand our regulators better than somebody who is coming from abroad. I think in terms of exit, if we're worried about exit, exit will solve itself. The reason I told the story earlier, just from 2 IPOs, all of a sudden everybody's now excited about exiting on the NSE. Exit will solve itself. Let's first solve the first problem of, there's a problem that an entrepreneur has seen in our community. They want to solve this problem. How do we get them the funds and the money to do that? And then finally, again, to piggyback on the first point I made earlier, if all our entrepreneurs are setting up their holdcos in Delaware, which is what's happening right now, and there's nothing, I don't blame them, to be fair, like, because I get it, that's where their money is. It's easier to raise from American investors with a Delaware company with a fancy sounding name rather than Wadi Gira from Nyeri, who's going to set up a company there, right? Like, I get it. But the reason they're doing that is because the only people giving them those checks are there. If we are here and we can figure it out ourselves, we solve a problem. So for example, whether it's Rwanda with Kigali International Financial Center, whether it's what Mauritius is doing, what we were supposed to do with Nairobi International Business Center, but that has not really taken off. We form our own solutions. We get our pension schemes to take this money that they're sitting on to invest on companies on the securities exchange here. We have created our own exit pipeline. So I would say worry about exit later. Let's solve the immediate problem and then look beyond just tech. Oh, and sorry, my last point. AI is now here. The reality is Africa is not going to produce an Anthropic. Let's all be very honest with ourselves. And you know what? I am okay with that. Because China gives us a model of what we do. Are they called DeepSeek or DeepMind? So taking existing technology from the West, where they can spend trillions of dollars, they spend a fraction of the cost to come up with a very good model that works just as well as the models coming there, which is what us guys did with fintech. Fintech, our entrepreneurs looked and saw, we can't have $1 billion to set up a bank like JP Morgan, but with a couple of $1 million, we can serve an underserved population, right? So I think AI is going to present for us. First of all, it's going to kill all of these software as a service businesses. Sorry if you work in such an industry. I think it's going to lead to a reorganization of those businesses. I think as that happens, then our entrepreneurs are going to find ways of using cheap open source tools, or if not that, other tools built on existing platforms to come up with solutions that solve for us problems that we face now. I think our trick is not to look for the next Anthropic, but to look for the person who uses Anthropic tools or similar tools to find our solutions. That's where I think it is. So don't overlook other industries beyond your regular tech.
serious. Yeah, he was joking that he doesn't look like he's serious, but he looks like he's serious, and he is very serious. Thank you very much, Wadingira, and I really like those points of, especially the points around contextualizing angel investing for us, right, for the continent, not thinking about only equity, saves, and all that. If you need to do revenue-based finance, if you need to do debt, if you need to invest in more traditional kind of sectors, if you need to do smaller deals, because I remember there's a time where, if you're an angel investor and you didn't have $10,000, you'd be like, you're not an angel investor. Are you a real angel investor, right? And the moment you believe that, and it assumes that all our businesses need to raise 100 million shillings. There's some businesses that you can invest in small amounts, 100,000, 200,000, and that's a significant impact for the founder to be able to move the conversation forward. Now, let me see. I have only 2 more minutes, it seems, or 4 minutes. So I don't know whether there's one burning question. Wow, there are many questions. Now, let me, I was told that a question is a statement which has a question mark at the end, and it's a short one. So I'm going to allow, maybe, let's just pick those 3 questions. 1, 2, okay, this guy is here. So we need to give the lady a question. Wow, those are many. We'll ask the 4, but simple statement with a question mark at the end that doesn't take more than 30 seconds to ask.
Do you have a positive story about preferably a Kenyan company with some brand presence of a deal that actually went right? Do you have any story that you can share of that you reminisce about, that I did a deal, or directly or indirectly you know a deal that went very well in Kenya, a Kenyan startup?
First of all, which Kenyan startups are successful? There are quite a number.
Sorry, yes.
M-Copper, financing solar panels. Now it sells, it's I think one of the largest sellers of mobile phones in the country. Victory Farms, who do fish. I'm very likely to bet if you buy fish from a supermarket, it's come from Victory Farms. And Sun Culture, who are now doing solar panels as well for homes. These are the 3 that I know I've worked across them or for them on deals. So there are a number of those that are available. The ones that fell aside, again, it's not a symptom that there's something wrong with the market. That's just how deal flow goes.
So my question goes like, okay, how will we manage to stay in the circle of blockchainimity, whereby like as a startup founder, like, okay, I want to save, but I want to save in a certain okay, I want to save using my industry to get funds from maybe a certain organization. So which bill or which kind of rules should one partake or go through so that he or she can or the organization can be able to acquire the funds to make the startup organization to be strong?
Look more widely than just tech. Africa's problems are not just the next tech company. They're more simple, not more simple, but they're more basic infrastructure and other problems. And sometimes we don't think of entrepreneurs who are solving those other problems as also founders or startups. We see them as businesses, and then we only tend to see tech businesses as startups because we've adopted the Silicon Valley Silicon Valley way of looking at startups. So I'm saying, even as an angel, expand what you consider to be a startup. Investment thesis, I'll let them answer, but I think for me, if you were to ask me, I'd say it's a very personal thing. If I gave you mine, it would not make sense to everybody in the room.
There was a question, and maybe we can start with news for this one, about syndication. So there's one question around, do you see syndicates turning into funds? I don't know what are the pros and cons for that. And then secondly, there was I don't know, should or, can angels just indicate into a fund and they just sit back and they wait for the investments? And Umulika can also contribute on those 2.
Yeah. I think it's very interesting because that's precisely what we see. I mean, I see in my...
If somebody has given their data, their information, their plan, their program of action, and then they don't qualify for funding, already the data is out. The information is web. Okay? So now, from what happens?
What every startup needs to do is, before you open up your data room, even for you guys as angel investors, before you give out your information to whoever is the lead or the other people in your particular syndicate, do you have an agreement on confidentiality? And what does the agreement say happens at the end of the life of that information? If you're a startup, my advice always is be the one to open the data room into which you upload your docs. So from Google Drive to Box to the more complicated intralinks and so on. Be the one to open it, because you then control what you put into that. You control access rights, including who has editing rights, downloading rights, view rights only, for example. You can keep a track of who's managed to access, and your NDA then tells you at the life what happened. So for example, in the big deals that we do, the client will operate the data room. There will be no downloading rights. So if you want to review a document, to review it on screen, so that at the end of the process, it's them, the client, the target, who then downloads the information if they want to download it, put it into a flash drive, or give us a link if we need to keep that information for any reason. So it's practical plus the legal.
In the near future or in the far future, either, do you see more syndicates becoming funds? And maybe to add on to that, in what way do you see the syndicates evolving over time as, you know, as things progress and as the industry changes?
My question is whether the team sees an opportunity in syndicating deals into funds as opposed to into direct companies as a way of diversifying the portfolio that you already have. Thank you so much.
You've actually said not invest in tech, but tech in itself is an enabler, because from you to get from point A to point B, I used Uber, right? For you to be able now to order something, I used some tech-based, application or something. So is it more of not invest in tech, or how do we use tech in other businesses to up them? And now to my ideal question is, what is your ideal investment thesis look like to all the panelists?
As I said previously, we at INP, we help launch small funds, mostly SME funds, but they can also do some early stage and startup deals. And in a few countries where I've been prospecting to launch funds, I was approached by angel networks that actually want to go to the next step and start their fund. They don't know how to do this by themselves, so or it would take more time. So they're happy to partner with a potential sponsor. So I think it's a dynamic that exists. I know that in some of the areas that I mentioned in West Africa, we need to be prepared and go against the flow, against our very tough legislation. But this is also moving. We're seeing more lobbying to allow funds to be structured, and if it's not funds, it will be companies. There are options for that. But yeah, definitely, I see some of the strongest angel networks that have the traction, that have the experience, becoming funds, and I think it will create a great continuum. That's what we want to see. You want to add to that?
I say that all the successful syndicates I know, they moved to become a fund, because if you have good track record, if you have one or two exits, which is quite rare, then people want to join, and it becomes too many people, and then you have to change the structure. So Future Africa became a fund. Hook has launched a fund and they closed, so it's quite natural for a syndicate, if they are successful, to become a fund. And on the question of Launch Africa, so you know the answer, because you guys have been marketing aggressively to angels, and it makes total sense, because as a VC, angels who like angel investing are natural LPs for you. So they will upgrade to become an LP once they build the confidence and they build the patience to wait for 7 years. And trust you, and also once they try to angel invest on their own and realize how difficult, frustrating it can be. So I was actually part of. I was born and raised in Belgium, and there's a ZD Circle in Belgium. So they decided to stop angel investing and just put money in Launch Africa, and it makes total sense, because now they want to continue, but they realize it's very difficult. They're not on the ground, and you guys have a lot of success. So why not give you the money instead of getting too many white hairs? So and you should continue. I think that angel syndicates are your natural market as a VC. And then the only reason why some people might not want to syndicate quickly into your fund is the cost, because angels are surprisingly stingy. When you tell them, give us 5% and you don't have to do anything, they say, no, I want my 5%. Meanwhile, they will spend so many hours, they don't value their time. They will spend months and hours and fight with their friends because they want to do it themselves, and they should have given you 5%, to be honest. But I would give you 5%, so you do all the paperwork. I hate paperwork. But most angels resist in the beginning. And about my investment thesis, so like what Thingira said is very personal. So I invest in women founders and in agri-tech. So women founders because they need capital, and agri-tech because most Africans are farmers, and if we can find good things on agri, we solve a lot of problems in terms of quality of life, livelihoods, income, and etc. So that's what I do. But it doesn't make sense to most people, and I totally understand. I don't feel bad about it. Many of my fellow angels say that they want to make money. They don't want to invest in women because there's a reason why they only get 5% of the capital. And then of course sometimes I get really upset, but I understand them. They want to make money. I don't want to be part of the problem. I think if I write too many checks to guys, I'm part of the problem. So I don't want to do it. And also I want my small savings to benefit the larger number of people possible, and Agri does that. That's why I have 25 investments, 0 exits, and a very pathetic portfolio, but I feel good about it.
Yeah, I think on the investment thesis is also personal to some point, but to some extent, but at the same time, you also want to create a community of investors. CBAN is a genderless angel network. It's built in. So of course, all of our members would not really care about investing in women, but the leadership of the network cares a lot about that. So we always make sure that in terms of members, we have enough women, because we want to bring more women to angel investing. And we know that for this to happen, we have to be conscious of that, and have to make efforts for that, and we create strong benefits. And same thing for the pipeline. We make sure that we have enough pipeline that are women and investment as well. So again, you have a small number of people powering that. And if those people have that motivation, even if it's not the whole investment thesis, I think it carries a lot of weight.
We need to network. We can ask more questions. I know Linda is my friend, so that's why I will not take her question.
There is the element of putting together that group of people to put money as LPs. There's that cost and structure that is not quite clear. And I felt like this is a good forum to kind of just address that. Because there's a cost there. What is the best structure to utilize to put money into something like a Launch Africa? You see, because there's a cost there, and you're putting in small money. It's not a lot of money, but it becomes expensive at the end of the day, and people want to make money.
Okay, because we'll give. No, he wants to answer. Okay,
you can come and answer it actually. No, but they've done a lot of work.
Is this my panel or is it your panel? Anyway, I'm joking.
There are multiple structures you can use. There are many platforms you can use. ZD has one that they've used. It depends on the jurisdiction you want and how easy it makes it for the LPs you want to bring on as SPV members to put capital in that SPV. I'll give you a quick example. You have Sidecar or Canopy based out of the US. You can syndicate into that, but you also have European-focused SPVs if you're based out of Europe, like ZD, that you can syndicate the LP capital, then we can onboard you as a single line LP into our fund. We are domiciled in Mauritius, so we are regulated there. There's so many benefits from a tax perspective. Just having conversation with Stephen from a capital gains and currency exchange control perspective. Now, as a fund, we invest only in companies that are domiciled in investor-friendly jurisdictions. So it means it's easy to put the money in, and if you need to take the money out, it's also as easy. And we've syndicated investments from over 400 LPs. Our main investors are high net worth individuals and family offices. But now we are doing more of syndicating diaspora capital, but also local capital, which a lot is coming through the angel syndicates. We've done that with ESPAN in Tanzania. We're in the process of trying to do the same with NIBAN. And the more the merrier, because now the local capital has seen and understands VC as an asset class, that they are willing to take that risk and invest in diversifying their portfolios. So if anyone is interested in how they can syndicate into Launch Africa, I'd be happy to have a conversation afterwards. Thank you, Stephen.
Thank you, Michael. But seriously, please speak to Michael. They've done some good stuff with Launch Africa. We need to finish. The conversation can keep going on. So just a few things from me. One is I still think even as we syndicate and we get into funds, the space for individual angel investors is still there. And I think it's such an important space to retain. Because what Michael will tell you is that if you go to raise money from Michael as Michael, he can write you the check after today's session, right? And you'll get the money tomorrow. If you go to him as Launch Africa, expect those funds, minimum time maybe a month, or even longer than that, right? Okay, he's saying that even at Launch Africa, they operate angel style. But anyway, funds generally, can be a bit more complex. But as even as you're putting your money into a syndicate, I think you can also make your own direct investments. And I would say still make your direct investments. An angel at the end of the day gives three things: capital, connections, and coaching. And at times, if you just sort of like push the money into a syndicate, there's a feeling that, okay, they're doing it, why should I also get involved? So please get involved in the solutions. That's one. And then two for me is just to say that we have these conversations every quarter. So if you've enjoyed this conversation, we have some of them virtually, some of them physically. So please follow AAA. Make sure you take a photo with I am AAA. It's around here somewhere. But please follow these conversations. We like having these kinds of conversations to be able to move the conversation forward in terms of early stage investing and angel investing in the continent. And then secondly, we did choose I am AAA for a reason, right? If there's one thing you can pick from this conversation, is that we are all part of the solution, right? And AAA is all about that. Africa Angel Academy is all about just being part of the solution. So we hope that as you leave here, the one message you've gotten from the panel is you are part of that solution to change the narrative, to change investing in the continent. Thank you very much. Happy networking. And thank you very much to the panel. Let's show them an abbreviation. Thank you.